maintained that there is a difference between our opinions and our trades. To elaborate that point, I have set the chart of gold futures against the US dollar. The time frame selected is of monthly, and here we will see that gold has created a fresh all-time high, which has been the theme particularly since COVID, where gold has repeatedly created new highs month on month. And even if there have been any pullbacks, they have been very shallow, bought into, and gold continued to create a new high. It is obvious that such a security, which is creating new life highs, is bullish, and therefore, my view on this security would be favorable. That is, I would like to buy such a security. In other words, this chart pattern is the formation of a bullish bias. But having said that, the question is, would I go and buy gold today? And for that, my answer is no. The reason is obvious. Even though the security is in an uptrend, it needs to be oversold in some time frame for me to consider buying. Ideally, if I am assessing the trend on the monthly time frame, I need the security to be oversold on the weekly time frame. So if I select the weekly time frame and set an oscillator RSI with a setting of 5, I will note that gold is actually highly overbought. Because our bias, which is set on the monthly time frame, which is that of a buy the dip, the highly overbought weekly status of the gold simply means no trade on gold. Once again, the process of forming an opinion on any security can simply be made by looking at its pivotal highs or by setting a moving average, for example, the 20 period moving average. An upward sloping moving average with price comfortably trading above it is usually a good enough premise for a uptrending security. Such a security, if becomes highly oversold on the weekly, one needs to then look at entering the pullback. For example, we will see at each of these points where gold was oversold largely resulted up in a follow-up buying action, even though the trend of gold has been positive for more than 3 years now. Let's take another example. The chart that I'm setting now in order to discuss the example is that of Nifty Pharma. We will note that Nifty Pharma created a new life high in 2023, where it decisively broke a near 8-year a near 8-year range at about 14,000 levels. Since then, the index has made a new high of 24,000 and is currently in the process of pulling back. If we note the broader characteristics of this chart, that is a new life high, upward sloping moving average, price trading above the moving average, is very similar to that of gold. Therefore, my opinion on this chart is very similar to that of gold. That is, I would like to buy the dip into this chart. And the question now here is, would I go and buy today? For that, I would simply change the time frame into weekly and look at the oscillators. If the oscillator is highly oversold, then there is no doubt that I will be looking at price action on the daily time frames in order to determine when to buy next. Currently, we see that today's close has created a new low, rejecting this bullish counterattack candle, and therefore I will patiently wait for this security to create certain tactical confirmations on the shorter time frame in order to go long on the Nifty Pharma Index in general or its constituents based on this analysis. I hope that in this video we have learned the difference between opinion and trading. One necessarily trades a subset of their opinion, but not every opinion is traded. The idea is to create a framework of how we form an opinion and how we take the trade, and they could be very different from one another. With this, I wish you the best for the remainder of the week.